Yes, yes, yes. Good AV. All right. I had a different microphone. I was trying to do a little like lapel mic that sounded good yesterday, and for some reason Zoom's not picking it up as a audio option. So that's weird. Microphone. Oh, there it is. Hang on a second. Let's do microphone one versus microphone two. Try this guy.
All right. Give me a quick AV check. Testing, testing, testing. This way I don't have to talk so loud on this little mic. The other one, I feel like I was getting some feedback. Okay, test okay. Good, good, good. All right. Thanks, everybody. That's good. Let's go ahead and get started. So happy Monday, happy Macro Monday. Last week was pretty wild and crazy, but was exactly as expected. We needed a pullback. We had a bit of a pullback. Market's down about 3.3% from the recent highs, and that's fine. It's possibly going to pull back a little bit deeper. I am looking to continue to kind of, you know, tread carefully as far as how to fade the moves. Let's do our numbers. Let's stick to the process. Volatility is a little bit higher. These are all good things. So let's take advantage of the opportunities that we have and see what the market's going to give us. Okay, broker platform is up. Take a look at SPX this morning, get some key levels. So this morning, bit of containment. I'm going to see how high up we can go today to fade. We look at the implied volatility. We're showing a 24.4. If you've been watching this the last couple of weeks, this was down into single digits. So we had a pretty big burst in volatility. Take a look at the VIX. VIX is up to 19.03, trading live right now, which means the market is looking at potentially, I'll go 19.03. So we're looking at potentially a 1.18% move based on the close. Now, what gets a little bit tricky is having a gap up or gap down and that potential intraday volatility. I usually measure the VIX rule of 16. I'm going to do a slide on this too with my deck here and some of the lessons. We'll do the VIX rule of 16. I actually thought in some of these morning segments too, I'm just going to just talk strategies. Let's talk debit spreads. We'll talk credit spreads. I've got butterfly spreads. Um, Earnings. I mean, we'll start touching on a lot of these things so I can just make sure that any trade, any strategy, anything I'm running on any of my services, no reason for us to be intimidated or not understanding what a strategy calls for. And I'll even put the silly names out there too. Iron condors, jade lizards, reverse of those, iron butterflies. We'll start doing all sorts of fancy stuff just because familiarity, right? I start to teach all these things where we understand the breakdown. We can deconstruct all these trades. We've got more, more arrows in our quiver, so to speak, right? Okay. So with the potential of 1.18%, that would be from the close close on Friday. Let's go up 1.18. That puts us up to around 63. See about 63.05 to 63.10 today. So potential top today based on the VIX. And the bottom, we have to watch the VIX obviously, but potential lows will be right around the 61.65 zone. But just be careful if the VIX is elevated. Um, be careful not picking the bottom. We did have a low last week around 10 a.m. We had a low revisited around 1:45 to 2 p.m. and it did hold for the day. But we'll see what today gives us. SPY pre-market is up just a tiny bit. Here is the SPY. Futures climbing back a little bit. We're up like 0.4, 0.5% from the close right in here. That's a 0.58% move. So based on that, with a higher implied volatility, I'm going to go based on this move. Let's go 1.18% I mean, if we can sell, so we're pre-market 0.54%. Is that right? 0.5. We'll go about zero point 0.6 on the SPX then. So we're going about 0.6% from close. Okay, so it can open up around 62.74. So 62.74, let's start it there. Let's go our 1.18. So if we can end up selling into like a 63.40 to 63.45, 63.40, 63.45, I'd like that to be a good spot to kind of sell calls today. I still don't think that this market is done going down. Let me know if you hear a dog snoring on my lap, because if I need to switch back to the noise canceling headset, I can. All right, lay down, bro. But a pullback into the 50 period moving average. Let's go here. Deanna, can you make it so everyone can see chat? For some reason, all I can see is save chat, and I can't see the ability to turn it all on. Mark says, I found a box debit spread on SPX 10 wide for 835. Mark, that doesn't seem like the right price. What's your timeline, dude? Usually a box spread is like a year out, and that gives you essentially the same. I don't know, man. I gotta see the legs of that trade. I've never seen a box spread that's, I mean, that's giving like 16%. A box spread is risk-free, but not for a 12-day trade. That should have been a debit of like $9.98 or something like that. Like, I mean, a box spread is basically taking around like the 10-year yield. So my question is, did you get filled on the trade? Yeah, I'm gonna ask. Um, can we change Zoom chat to everybody? Okay. Take a screenshot of that, Mark, if you want to send that to me. I'd like to see it. Yeah. Usually a box spread is something you got to go out a year for, and the benefit is I mean, it's mostly a risk-free trade, and I say mostly because I've rarely held a box spread for an entire year. So, but we've talked about a box spread in the past in the daily profit sessions. You would go out a year. So right now we have interest rates around just over 4%, right? If you go US 10 year around 4.2, US 20 year around 4.77, and US 30 year is around 4.8. So safe to say we should be getting about 4% if we're going to hold something like this for a year. So if I went out a year, and this would be, August of 2026 on SPX. So we'd go all the way out here to August 21st. A box spread, let's say that I go 6,200 by 6,300, 63 by 62. You can see right there, box spread is 96.25. I'm getting 100 wide on the trade. So if I get filled here, I mean, the mid price is around 96.65. So 96.65 minus the 100 spread, you get 335. That's not that good. Like you should be getting closer to like, I don't know, this should be like 95 bucks, 95 to $96 tops. You want to be able to pull in over 4% on this trade. So you're almost better off playing. And this is a boring instrument, but you're better off playing something like BIL, which is a 1 to 3 month treasury mix. And you got to hold it for, typically the full 30 to 60 day duration in order to get this thing to fulfill. But this is a, unallocated cash instrument where if you have cash and you don't want to tie it up into a trade and you want some interest on that, you can tie up some of that cash with BIL, and this will give you roughly the mix of the 1 to 3 month treasury. So if we go USO1MY, which is the 1 month treasury yield, that's at 4.36%. Okay. So if you were to hold that, say, for 30 days, you're going to get 4.36 divided by 12 because this is annualized. So 4.36 over 12. That unallocated cash in BIL, if it holds for 30 days, you're going to get 0.36% on your capital, right? So if I had a bunch of unused cash, then I can get at least something for it. That would roughly annualize out to about 4.36%. So box spread is a way to exploit that with your trading account. You can also take partial profit, but that's still not offering, like, it's risk free, but it's not really offering the comparable yield that I'd like. Okay. Mark says Sunday morning searches have no meaning by Sunday evening, all the possible. Yeah. I mean, Sunday, if you're looking at actually a tradable instrument like SPX, I mean, your option chain is probably not the same as what you get Monday morning. And we won't really have anything official until we go live here in 15 minutes with the market. Would you take profit on December QQQ bear put 35%? Um, I don't know. Let me look at some of these hedges. Let's take a look at some of these crash insurance things we have. So I've got a bunch of hedges here. Hedge, 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 hedge. Most of them are not doing well, but that's the point. I don't want a hedge to pay me all the time. I want a hedge to pay me when it's needed. Some of these hedges we're putting in, March. I put a lot of these in like April, May, June. As we started to melt up, I'm like, well, I'm gonna have something at least at the end of the year. See if I need it. This hedge to January. This hedge. So this is going to be probably worthless. All these August 15 ones, these are probably worthless. Another one for October. The 6,000 by 5450, 5,000 by 4,300. Okay, so I mean, not a ton of profit on that hedge. Let me check some other ones. Russell, this is a hedge. Again, Russell's been melting up as well. I did that because I'm doing a campaign trade on IWM for Project Options Edge. We've been just adding covered calls. So I don't see any of those hedges really playing out the way I want. QQQ. This is a 435 by 430. That's a ratio spread. Okay, hedges. Mine's actually down. The 425 by 340, 435 by 430. That's a ratio. This hedge 425 by 340. Only cost me 489, pays me potentially $8,500. That's not a bad play. I mean, think about the reward to risk if needed. If we had the markets dropping back to April lows, that's a huge payout. Something that potentially pays out over $8,000 to risk $490. It's not bad. So it's about 20 to 1. Okay, but is it paying me right now? Not really. So we'll wait. Okay. Collar trade. That's fine. SPY, any other? I'm just looking for hedges specifically. So it sold some premium last week. This one's looking good for full profit. We get a decent drop below, this, where are we at on the SPY? SPY's at 621. If we drop into the 590s, this one potentially has a profit trap. of 500 bucks. So $1.62, I'm up $1.61. I'm up 99.4%. I could just take the profit. But if the market drops another 20, 30 points, this one potentially has the ability to get over 100%, over 100%. So this is going to be a trade from like waterfall income, some of our fancier trades, not just the standard waterfall income, but some of the flexibility and fancy trades we've been taking. Covered calls, August 15th, collar, wide bull put spreads, naked puts just out there. Sold some naked puts last week. Hedges as well. 525 by 480. Again, negative, negative. All my hedges are negative. It's fine. But if we see this market tumble over, and I'll just talk where we're at right now. If we go to, oops, not stocks, I need SPX right here. So if we pull back to the 50 period and into this cluster, I expect this area around the US China trade agreement gap, this area should be pretty key support. So do we come down to the 50 period first? Is that the dip that the market is trying to rally off of? And it may not just go down V bottom. If we go down a V bottom, then we're going to have a steeper decline. That's probably going to be more of the V bottom look, which will be scary. This would be a double-digit correction or so, probably 10%. But if we just go down to this level, then we go back up, we go down again, probably the structure where this market continues to grind higher. Okay. I am a little leery in the, let's say, next 1 to 2 years, coming into like a 7,000 plus S&P, thinking that we have another, reasonable correction on the horizon. But I think right now this market is pretty key on just pricing in all the optimism, pricing in everything that's good. Earnings have been pretty solid. Even Mag 7 beating earnings to a pretty nice degree, top and bottom. We have a big earnings season or earnings week this week. We have like almost 1,300 companies reporting earnings, so there's some decent reports. I would imagine that the consensus overall is that earnings will be pretty steady, pretty stable. The jobs market last week, I mean, I think the result is Trump wants to fire whoever is. I mean, I don't think there's one person responsible for jobs, but the non-farm numbers have been getting worse and worse and worse. We saw a lot of this where, what was it? Of the Through the entire Biden administration, there was a showing of like over 1 million plus jobs. And then there was like a massive revision where like 800,000 of those jobs were like, we don't really have those jobs. It's so crazy. So the numbers are way off. I take pretty much, even CPI data we get every month, I take it with a grain of salt. Even jobs numbers, I take it with a grain of salt. I think unemployment is probably the key level, and then just headline, like headline inflation, headline PCE or core PCE. We had the Fed it was a crazy week, like Fed last week with earnings and non-farm. And, the market didn't like it, but it was needing a correction for a while, right? Market needed correction for a while. All right, let me see. All right, so type in write us in the chat if this makes sense as far as correction, where we could go, what we could plan for, jump up in the volatility index. So we spiked up into the 20s last week. Market had a couple wild swings. Naturally the market reverts slightly. We're up to 21.9 on the VIX. We're pulling back a decent amount. Do we just continue to fall on the VIX? And that was just a one-off event? I don't know. That makes sense? I mean, I think there's more to go. I just don't know if it's going to be like this when the VIX kind of spikes up. Do we just have like more aggressive? Like that's a big single 1 day move that was back during FOMC in December. We see those big 1 day moves. I mean, that was notable, but I mean, nothing that we've seen where it's like super surprising VIX and the market's down, multiple percent. Usually when the VIX spikes up, it's because the market is down, not because it's going up. So as we go into today's session, if I can look around, if we're opening around 6274, there's two levels I want to measure. Either going up around 1.18 here, Okay, so like a 63.10 by 63.15, or if we're going to open at 62.74, give or take, we measure from there. Okay, so for me, the way I'd like to play this today for daily profit play will be if I can get enough premium, I'll probably do a one contract trade at this premium and a one contract trade at this premium if I can get a couple dollars credit. Now, that's a one contract starter because if the market is going to go, sideways, sideways, spend all day kind of grinding back here, I'll add a second contract and a second contract at a much better credit and try to see if those levels continue to get defended. So if you're in daily profit play, look for those alerts. I'm probably doing like a trade one will be sitting with just one contract if the premium is decent, and then trade two will be let price come to us and get filled at a higher credit, and also improve the break even and see if those lines in the sand continue to be defended. Okay. All right. Very good. Okay. Um, we've got 6 minutes for the open. Let me take a list of strategies. So give me an example here. Let's delete this from last week. So daily profit plan Monday. List of strategy names. This is open to the community. So trades like a debit spread. Okay, so we can do bull call spreads. We can do bear put spreads. Okay, credit spread. We can do the bear call spread. We can do the bull put spread. I'm going to go into another segment in these mornings where we're going to deconstruct the trade and we'll make it applicable to current market conditions. We can, have real examples, whatever instrument you want to trade. I just want to help, give more education on ways to trade the markets up, down, and sideways, and getting over some of the names that these silly little option strategies have. Okay. So debit spreads, credit spreads. Um, Paul, is it URA? Is that the ticker? Okay. Mark says calendar spreads. Okay. Calendar spreads. Diagonals, one of my favorites. Okay. Iron condor. Iron butterfly. Yep. So we can do butterfly. We can do broken wing butterfly. What else? Jade lizard, which is a stupid name, but actually a really good strategy. We can also do these are strangle, straddle. Yep. The old buy right, which is just buying shares and adding a cover call at the same time. Ratio spread, also one of my favorite. Ratio spreads. Okay. And obviously we're not going to jump into these all at the same time. 111, 1111. These are just modified ratio spreads, but I like these. Zebras, leaps, which you can use those and modify these. Okay. So we're just going to sprinkle these in little by little over time, and I'll try to make a point where we have a live session, we have it recorded. If anyone wants to go back and revisit these strategies just to get familiar with them, we're going to kind of deconstruct. I'll just have a new segment on this session. We'll just deconstruct the trade. Okay. Dave says, "What's a zebra?" It actually is an acronym. It's zero. It's zero extrinsic. Uh, Zebra options trade strategy. So it's zero extrinsic back ratio. That's why I've never called it that. Zebra was something, this was kind of created in the pits. And I see Tasty, a couple of Tasty. It's a Jen and Liz show on Tasty. They're like doing it from the SIBO in Chicago, and they actually, for their long positions, they do this quite a bit. It's like a leap, okay, which is a long dated option, but you have capped risk. You still get all the benefits of the upside. If the underlying asset goes higher, you get the unlimited profit potential, but you don't have to pay, you don't have the unlimited risk to the downside. Okay. So anyway, lots of stuff. But we'll sprinkle these in. And if I can think of more, I'll give more, but we're also not going to get like, I want these to be applicable. Like I've taken all of these trades in the past. So let's talk through them. Let's deconstruct them. We'll get some touch points. So anyway, this is again lots of information, lots of content, lots of lessons over the coming weeks, which will be fun. And that way, just more and more understanding of, huh, I never thought of trading that way. I never thought about using an option that way. Well, up, down, sideways. That's the whole point. Okay. If I can better equip you with ways to trade the market, maybe some of these become, a little bit more familiar, maybe more of a go-to. That's fine. All right, here we go. It's opening bell. We are going to be opening up a little bit higher. So I've got the gap open. So I'm looking at two spots, either the 63.05, okay, which is going to be roughly based on the close from Friday, or I'm going to go up to 1.18 here and I'm going to sell two spots. I'm going to sell like the 63.45 by 50. So I might just do bear call spreads this morning for daily profit play. Let's go SPX. So I'm going to try 63.10 right now is around these deltas are way off. Hang on a second. Is that right? Oh my gosh, we can go so far up. We go so far up today on the chain. If this is right, we can get up to like 63, 45, and 50. Wow. Well, that's good. So I'm looking to sell into the 20 deltas. So the VIX is at 18.67. Here is currently up around 0.73%. 1.18 puts us around 63.09. Those deltas are pretty high. I'm not going to sell the deltas that high when I can go up a little bit higher. There we go. This is more what I thought. Okay, so the delta switched now that it's 9:30. So 63, 5 and 10. Oh, hang on a second. Sorry, hang on. Benji, bro. Open up. Okay. Okay. Open up. All right. Forward. All right. Sorry about that. My dog tried to die. All right. We are trading at 62.88 green on the day. This actually is pretty good. So, two levels I want to watch. I don't think we're going to come up this high. What do we get for like a 62.40, 62.50 right now? Not a ton. I think the 63.05, 63.10 is a little bit too close to current price. I mean, it's right around the expected move. That's a 19 delta. I'm going to try a 15. So 15 and 20 for one contract. I will do a 40 and 50 for another contract. That's like garbage credit though. So $1.50. Let's try these. I'm going to try one contract fills. So 15, 20. Go there for 5 or 10 wide. 10 wide. It's 13 delta, $1.65. Start there with one contract. So 170. Got filled at 170. All right, I'm going to start there. I'll put this in for the daily prop play alerts. If these get filled at better credits, I'm going to take another contract and take a 250 to $3 credit if price goes higher, but we're at least going to start there. So new trade, SPX. This is popping in the Telegram for daily prop play right now. So today's 8/4 expiration. 6320, 6330, 6325, 6335. All right, got filled on $1.70 credit. Okay, so that trades in. And then for the 25 by 35, if this one happens to get up to, that's 10 wide. If this one happens to get up to like maybe $5 premium, I might take this one for like six or $7 at another contract. So this will be pending at $7. Okay, so the market's calling back. I'm going up into the 63.20 zone. So line in the sand, 63.20, which is right here, and 25. See if price can just kind of hang out and respect these levels. If it goes a little bit higher, that's fine. I will sell more premium. VIX is at 18.29, which means from the open here, from the open, we're already at 0.91%. VIX at 18.3, maybe a 1.14% move, which from the close Friday, 1.14%, puts us right around 63.05 to 63.10. Okay, now it doesn't mean that we have to exactly have it measured from Friday's close. This might be from the open here, which is why I want to have a different credit. So if we start from here and go up 1.1%, that's like 63.40 to 50. So the two key levels I'm watching today, put this in text. So the 63 kind of 10, I'd say ceiling 1, and the 63.40 would be ceiling 2. I guess I can call that resistance, yeah. So resistance 1 and resistance 2. Okay. So get this prepped up here. So 63.40 to 45. So watching those levels. So we open up around 76, which is close to what we said. Futures market just having a bit of a comeback day. We'll see if the market can hold this area. So either the 63.05 by 10, which I will consider if I can get a better premium. I might do the 20 by 30. 20 by 30. This one fills for $7. Take into the contract. Cancel. So 20 by 30 for 7. And 25 by 35 for 7. And then I should be able to sell this maybe 25 by 50. Sell that for anywhere between 15 to $20. I'm going to try it for 20. All right. It's going to work some positions. So I'm putting this in Telegram for a daily profit play, and then we'll move on to some other stuff. We'll go deconstruct a trade this morning. Other trades pending um, due to the higher VIX. I'm reviewing today's liquidity at gamma, resistance levels, as well as VIX rule of 16. Should see 63.10 and 63.40 act as strong resistance levels. So I'm starting with the bear call spread combo. Adding more contracts at larger credit fills pending. It's got a couple trades in. So the 63.20 and the 63.25, 63.50. So that's 25 wide. I'm gonna try to get 20 credit. That's if price goes all the way up towards like 63.40, 63.45. Try to get filled on that. Okay, so in daily profit play alerts, I'm posting 3 extra trades that are going to pend. If price just opens like it did here, opens up and hits this level and then goes sideways or fades, then our $1.70 this morning is going to continue to just decay. And if price comes back to gap fill at all, then we're going to be good for profit. Okay, they're just bear call spreads, Doug. Yep, they're just bear call spreads. Okay, Joan, where can we see this list? Well, the trades are in the alerts for the members. Okay, so I'm taking on a little bit of heat this morning. with price pushing up here. I'm going to see if these two areas are defended. This is that 63.20 zone where I'm starting my sell side, and then 63.40. If we get up to this zone, I'm going to be fading this move. Okay, VIX is retreating towards 18.14. So as price goes higher, VIX goes down. That does help us in the sense that if VIX is going down, it's going to be harder and harder and harder for the VIX to reach that full kind of rule of 16 level. So hopefully it's enough to, we have a nice little rally, a nice little comeback today, but it's not enough, right? Market's down 3.33%. Hopefully it's not enough to see this market, make a huge rip to the upside. It's not a ratio spread, Pete. It's not a ratio spread. It's a bear call spread. I sold the 63.25, bought the 63.50. That's a 25 wide bear call spread, but I'm trying to get filled at $20 credit because I'm going to make the risk as small as possible. All right. Why split the original condor? I'm not splitting it. I'm just doing bear call spreads. Look, if I did an iron condor, what's happening to my trade right now? If I'm doing an iron condor, what happens when the market's up for 5 minutes, up for 10 minutes, up for 15 minutes, up for 20 minutes? What happens to my iron condor? Call side gets threatened. Okay. It was a wild week last week. So if anything, I'm giving price room to ventilate. I'm giving price room to, breathe. I'm not trying to force. Granted, we have higher volatility. That's a good thing. The IV rank here at 24, that's good. We should be able to go further out of the money to get some of those credits. Okay, it's not a bad thing. Um, if I wanted to sell some put sides right now, I probably can. If I looked at just the simple put spreads, if price is going to continue to kind of climb, 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 and recover for the morning, this shouldn't be too terribly difficult. A 60 by 50 for 90 cents. You're risking, $910 to make 90 cents. I'm not super excited about that trade. I can make $1.55 in this one, but I'm risking over 1,800 bucks. All I'm saying is if this market is fighting back this morning, fights back this morning to then sell back off, look, the pullback is not done. In my opinion, this pullback is not done. So I'm going to try to do my best to just stay out of the way, sell some premium, let the market have its morning, and use trade size and use the rule of 16, stay out of the way, and see if we can get our trades, far enough out of the way. Make sense? Like that's all I'm going to focus on right now. Okay, John, nice fill. You got a better fill probably. It was it after me? I would say if it was maybe 5 to 10 minutes after me, because price has gone up for 20 minutes. That's probably why you got a better fill. Yeah, all good. So, and that's why I said I'm going to size in. Like it's one contract, and I'm willing to take on more. So if I do another contract at a higher credit, so similar trade, but much better credit. Similar trade, much better credit. And then this one is kind of calling the bigger level at the highs. And if that gets filled, I don't know why that trade doesn't look right, but hang on a second. All right, so make sure this is just a one contract trade. This should be the 25 by 50 there. Okay, I'll try that one for two. All right, there. That way at least it reads right. So here's how the trade sits. Okay, if you're in a standard daily profit play, Iron Condor, your call side is getting threatened because of these first 20 minutes of trading. That's okay. We do have a higher volatility. That's fine. But price is still directional. Right out of the gates, 20 minutes of bullishness. That's not what you want to see. What you want to see now is if you're in a standard iron condor, you want price after this move up, you want price to stall and probably go back to center, right? If we open up with center price and you put on a sell side and a sell side where this is your calls, this is your puts, if price goes up, you want price to go back down to center, right? If price opens and goes sideways, that's a perfect daily profit play, one of our core strategies. But if we open up and go directional, we want price to then go back to neutral. Directional is not good. When you're trading both sides, directional is not good. That means one side gets threatened. Okay. So of that $1.70 that I pulled in, I'm going to try to close that thing down for a dollar or less. If it gets back, I'll set a chart alarm here this morning. Chart alarm, we'll see if we come back to this level around 62.75, which is where we opened. And if we hit that level, I'm curious what that's trading for. If I can trade it for a dollar or less debit, if I can trade it for 70 cents or less debit, I'll take the profit. Okay, so we'll get these trades set up in the tracker. Center price was around 62.75. Okay, so this trade here. I'm putting this in the Telegram for daily profit members. Update for open trades. Okay. So if we come back to this center price, that $1.70 should be trading for probably low $1. If it's under a dollar, I'm going to take the profit, not worry about the risk. If I want to just hang on to it, because I still think we have, this level gap fills, corrections. We're just starting out for the week. I think we probably have a good looking trade to hold a little bit longer. Okay, nice, Randy. Okay, good. All right, couple things. Let's do this. I am running a little bit tight on time this morning. I want to get into some of these earnings plays that we have for this week, which we have a lot. So some of the notables. I'd like to price out something on Palantir today with all of you. I'd like to price out a couple of stocks. So I'm going to talk a little bit more about trading the news. So we have Palantir on Monday after close, HIMS after close. Tuesday we have Pfizer, which I do have some exposure in. Caterpillar's been a high flyer these last few months. Duke Energy, like utilities, have been doing real. Utilities are one of the better sectors in the world right now. U.S. market wise, utilities are doing very well. So are financial, so are industrials, materials. All these things have been doing pretty well. We have a lot of notables. Almost 1,300 companies reporting earnings. Palantir, HIMS, high flyers. Caterpillar, Duke Energy, watching those. AMD. So put some notables here. Pfizer, Caterpillar, Duke Energy. Let's see here. AMD, in the semiconductor space. Supermicro SMCI, that's been in the space as well. Snapchat, Lucid for EVs. That is the like high-end version. Like you have like Fisker and Lucid, some of those like high-end EVs. Rivian. I don't want to really trade these necessarily. I'm curious like in the EV space. A couple years ago it's like you couldn't do anything wrong other than buy EVs and then they turn to garbage. Uber on Wednesday. Uber, Shopify on Wednesday. Novo Nordisk on Wednesday. Disney on Wednesday. McDonald's. Big Mac Index is going to be important. Let's see. Duolingo, that one's been crazy up. Elf for Cosmetics, DraftKings, the world of gambling. Celsius, kind of like Monster Bev. Eli Lilly, Energy with ConocoPhillips. Trade Desk, that one's got pretty good volatility and sensitivity around earnings. Pinterest. And then Friday, I think that's good. So of this list of notables, I mean that's a decent amount to tackle into today. So what I like to do is talk a little bit of earnings, talk about some plays, ways to set it up, and then I'm going to try to price in a couple of setups. I think Palantir and Hims, watching closely, I think we can maybe find a trade if everything prices out the right way. Super sensitive, high flying stocks. I do kind of want to fade some of these moves. Um, but earnings is earnings. I mean, we saw Microsoft hit. Microsoft last week was like a 2 to 3 times standard deviation move, more than what was expected. It blew through earnings, but it faded hard that next morning. So once we gapped up on Wednesday, was it Wednesday or Thursday? I think it was the gap up for Wednesday. No, gap up Thursday, and then continue to fade Thursday and Friday. Because Meta, Microsoft had earnings on Wednesday after market. Amazon and Apple had earnings on Thursday. Okay, nice. Pete says, put spread out. Good. IONQ, yeah, I mean, I could take a look at it. I'll see what the numbers are behind it. Okay, all good there. Is $4 credit in the Condor right? I don't know. I mean, it probably is right from where you got in, but who's like what Condor trade you talking about, Coco? I didn't take a Condor trade. The trade I took was two bear call spreads, which right now are probably upside down. So if I go to my trades here, this is I'm going to just separate these. This is two separate bear call spreads. So this is a bear call spread. So DPP bear call and DPP bear call. Okay, so I got in for 98 cents. I got in for 72 cents. Right now they're trading for higher. So I'm down about $100 on one, and I'm down about $130 on the other. Waterfall trades, got some nice profit rolling in on those call condors. Those are looking pretty good. I want to sit on those a little bit longer, see if these markets do pull back to the 50 period moving average, pull back to previous all-time highs, just giving this market a little bit of a ventilation slash correction, which is highly anticipated. Okay. Greg says put spread 155 out at 95. Very good. EV infrastructure here is booming. I mean, that's good to know. I still think it's a long ways off. I mean, I don't think the Trump administration is super keen on EV infrastructure. I think they're keen on, I mean, I don't know. If is it EV infrastructure or is it like data center, this AI arms race? I don't know. It just seems like the government's pivoted pretty hard on EVs, because electricity is more expensive. It's going up. It's getting pricier. I'm sure you see it every month with utility bills. But anyway, yeah, we'll price it out. Okay. So here's what I'll do. For some of these thumbnails, I'm going to pull in, I'm going to make some thumbnails for the list we talked about today. It's going to add in some of these different strategies. So if we break down a debit spread, we'll talk through bull call spreads and bear put spreads, credit spreads. We'll just do one at a time. So I'm just going to literally have like a slide on each one of these strategies. If I can think of some more, I'll throw them in here. But this is a pretty good list. I mean, if we added this to our arsenal, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. That's 19 options strategies for up, down, sideways. That's a pretty good assortment to trade the market. So I just want to make sure that we understand if we deconstruct a trade, what's the reward? What's the risk? What do the trades look like? Is it all calls? Is it all puts? Is it a debit? Is it credit? We'll go through these in like really, really meticulous detail. Make sense? Okay. JJ, the second order, they're in the daily profit play alerts. So if you're subscribed to daily profit play, I've got 3 pending orders listed. It's all in Telegram. Okay, more of an environmental play, government incentives to switch from fossil. I mean, we had that. The U.S. had that under Biden administration, and then I think some of those subsidies have changed or been modified. So I just don't see as big of a push towards EV as I saw during the Biden administration, which was everything EV, EV tax credits. I mean, all we have right now is if you make cars in the U.S., you're not getting tariffed. And we also want lower energy prices. So we're trying to drive oil and energy prices down by driving oil prices lower. I think that's a slippery slope because we're probably still pretty well supported around like $50 to $60. The scary part is if energy prices go up. You got OPEC nations trying to cut back production, trying to keep prices elevated. Oil is always a very tricky, volatile asset due to supply and demand. There's global manipulation between what the U.S. wants versus where we can make profits versus what the world wants. It's a lot of pressure. If you push oil prices down below $50, a lot of parts of the world are not happy. You push oil prices too high, we as massive consumers of everything gas related, everything we need energy wise. I mean, it's heavy, heavy on gas, natural gas, oil, right? It's a it's a like thread the needle of supply and demand. So it's a lot of volatility. I know some traders that love to trade oil. I personally don't. I think it's just like one outlier move away, like one type of geopolitical risk away from blowing up your trade. And that's fine, but it's just I'd rather trade like a little bit more risk off or more conservative versus like having those outlier moves be a little bit more frequent in something like oil and energy prices. Okay. All right. So keep it on this for the morning. I'd like to pivot into some news. So let's talk Palantir. I'm going to try to do Palantir and Hims and Hers. So it's Hims is the ticker. So HIMS and then Palantir. These have earnings after close today. So I'd like to focus on this a little bit. And these are definitely going to see trades I'm going to price out here today and hopefully get a couple trades in this week. We did get filled on a trade for my newsbreaker service last week on Reddit. Let's see what that one's doing right now. So RDTT, this is out to the 15th. It's still going higher. I got filled for $3. I'm risking $2 on the trade. I need price to come back to 175. So Reddit's up here. I'm going to see if this move, I mean, this is probably overstretched. It's up 25, 26%. On average, this thing goes up like 10%. So if we go RDTT, average move is 17.4. So we're 8% higher than the average move. So I think I calculated based on a 20% move and got filled at a $3 credit. So it's a low risk trade. I just need to see if this will fade at all. Okay, but I'm going to price out for Palantir and Hims because that's aftermarket today. Okay, and the reason why, Coco, if you look at the trade, it's a bear call spread, and the trades that I took were out of the money, and now they're getting closer to at the money. So the credit that the market's offering is way higher. So I wouldn't take that trade. I would stay out of the money and give the market breathing room. So it sounds like you just missed the initial trade, right? You're getting a better credit, but now your legs are way closer to the current price. Okay. So here's what I'm gonna do. Let's talk. some catalyst this week. I want to price out. Okay, I want to price out Hims and Palantir today. So give me let's read through this. So we have little disclaimer. Okay, some of the trades that we're showing here in these examples are back tested, but we have live trades with a 78% win rate. Let me see. 75% win rate. No, that's right. 75%. Average return about 19%, including winners and losers. Average hold time is only a couple of days. If we're trading major news, if we're trading breaking news, earnings events, we're typically only holding these trades for like maybe 1 to 2 weeks. Okay. So I've had losses. I've had 36 winners in the service, 12 losses, 75% wins, and can't guarantee any specific future results. There's always risk in trading. We know that. Okay. All right. Why do I do this? It's a labor intensive calculation. I'm not going to win every trade. But the edge that we see is we're pricing out based on what the market's giving us. Okay. Price after earnings for 10 straight prints or 15 straight prints. We see whether the market is capable of moving to an expected move or not. And that determines whether or not I want to be a buyer or seller. All these trades are live. Every trade I take in my services are live. So, I can handle the losers. They do happen. I trade small. Trade size is what keeps me surviving. And I just trade through everything. I'll trade through the greatest bull market, the worst bear market, and I'll still be fine. So I want traders to get in that same mindset of like, if you